Hello my beautiful people, it's your boy Domilink. So in this video I'm going to be doing a breakdown of this trade I took on gold. What are my thought process, what was the confluence I saw that made me enter this particular trade. So currently we're on the 4-hour time frame. As you all know, we make use of the top down analysis and an approach to the forex market. So I'm going to kick off with the higher time frame, being the monthly time frame. So to kick off with the monthly time frame, now normally the way I would do my top down analysis, I will actually start from all this place, right? But because I was interested in the area, in the zone where the current price is, this is why I did my analysis within this zone, right? If I'm going to zoom in a little bit, not more details on this monthly time frame, so I'm going to go on the weekly time frame to show you guys what I mean. So on the weekly time frame, you can see I've carefully plotted out my zones. I've carefully plotted out my levels of interest, right? As you can see, I have a level here as identified as a support level. I have a level here identified as a resistance level. Then I have all these levels that are in between these key levels, that are in between these major levels, and I identified them with these yellows, which are what minor levels. So let's see, not more details also here. Now these are things that made me to these are what made me to actually enter this trade, right? So if I go on the weekly time, I'm on the weekly time frame, obviously. Now look at this. If I draw my trend line, you can see this is the first touch of the trend line, second touch of the trend line, then third touch of the trend line, which is usually, as you all know, this is usually an impulsive move. So let's take away this. This is under confluence. This is the first confluence. The second confluence is a bullish engulfing weekly candle that has closed. A bullish engulf. This is a bullish engulfing weekly candle, right? So what I needed to do now, obviously we can't trade, we don't trade on the weekly time frame, we trade on the 4-hour time frame. So what I needed to do at first, when I saw this bullish engulfing candlestick, I then saw this acceleration, right, which is a stage where price tries to catch its breath, the retracement stage. Price there retracing. What I needed to do was, okay, I then from swing low use my Fibonacci to from swing low to what swing high, and I saw that at around the 0.5 and the 0.618 Fibonacci level, right, this is where price started showing some reactions. Do you understand me? So that was why this is a confluence for me to actually long gold. Then if I go on the daily time frame, let's get more details. So on the daily time frame, I want you to take note. Now initially, I actually, this is where I entered this trade, right? I actually entered this trade from this zone, right? Exited here, then took the second buy at this point, right? So I want to show you how, right? First of all, we had that bullish engulfing candlestick, which comprises of this whole massive candlestick, right? But let's analyze what happened there. First of all, you can see a support level here. This is support because when price got here, we went up. Price got here, price went up, right? Now what I noticed again is, if I was to buy at this point, right, and exit at exactly at this point, I could hold the trade because price never broke this level. Price never what broke this level. So it will be very much comfortable for you to buy here all the way to this place, right? But let's cut the bullshit and let's go straight to the main purpose of this video, how I was able to enter this trade. Now, first of all, what you understand, Fibonacci always play a role in this particular analysis. Fibonacci played a role in this particular trade, right? So first of all, you have to identify the structure. We've identified the structure on the monthly time frame. The structure on the monthly time frame is bullish. The structure on the weekly is bullish. Now let's identify the structure on the daily time frame, which is also bullish, because market is actually what creating higher highs, higher low, higher high, higher low. This is a higher low because they're not breaking this previous low. So this is the what a higher low. Then we have a higher high, we have a higher low, and after a higher low, we do what onto the higher high. Now remember, we only buy one price. If it's not open, we only buy one price has made is higher low. Then we buy from the bounce. So these are the confluence I saw. Now normally the way I usually trade is this. Whenever price breaks an area of interest, this was my area of interest, because you can see whenever price got here, whenever price got from above, price went up, right? And you can see there's no recent touch on this particular level of interest, and you can see that price actually respected it around this zone. When price got there, we actually saw some reaction. Price got there, we actually saw some reaction. Then again, what actually made me said okay, this particular trade is actually going to play out, when I drew my Fibonacci from swing low to swing high. You can see at around the 0.5 Fibonacci level, price started retracing. Price started doing what? Heading all the way to the overall direction at around this 0.5 Fibonacci level. Okay, that's perfect, right? So that's another confluence. Another confluence again is this. If I'm to draw this perfectly, you can see it still fits around the top touch of the trend line, and you can see this is another confluence for us to buy. So what I did to execute again on the 4-hour time frame. So on the 4-hour time frame now, not much of a confluence was identified here, but what I needed to see was, what I needed to see was a retest, a break, something like this, then a retest to that area of interest, and this is where the buy order was triggered, and you can see how price moved all the way to this area of interest. Remember, price moves from what? Zone to zone. Price moves from what? Zone to zone. I was able to identify this zone as a resistance level. You can see whenever price got to this level, price was always having a problem breaking this zone. So this is a very, very, very strong resistance level, and this was where I actually exited the trade, leaving us with a 1:8 approximately risk to reward ratio with a very, very, very minimal stop loss. So you guys, this is how you can use the top down analysis. Having an idea of the overall direction of the market can help you trade in that direction on lower time frame and actually make profit. Don't forget, guys, the trend is your friend. So if you love videos like this, please subscribe to my YouTube channel and also like this video and comment whatever I think I need to add or whatever I missed on this video, and I'll see you guys in the next one. Peace out.